Why do these banks and NBFCs go down this route? They can easily raise money via deposits or via corporate bond. So why go down the route of securitization?
So I think securitization is one of the ways, just to take a step back, whether it is NBFCs or banks or any institution, enterprise, they raise financing or capital through different means and different sources, right? For banks, it could be from capital markets like issuance of bonds, AT1 bonds. Deposits is the biggest source for debt for banks. For NBFCs, there is banks, institutional investors, retail investors. Now, when you scale up, you need to kind of diversify your sources of capital. And securitization is one of those products. The beauty of securitization is that this is one of the most ALM aligned. ALM is asset liability management. So it aligns with what your asset is and your repayment. So from a risk management perspective, for an NBFC which is growing, this is the perfect product which aligns with how you're getting money and how do you have to pay. Typically for companies who give out longer term loans like vehicle loans or housing loans or a loan against property where the tenors are longer, securitization is a very good way to kind of raise capital which aligns with the loans they give out and ensuring that their risk on asset liability management is significantly reduced. For banks, again, I mean, right now in the last 1 year, given and we've seen reports saying that bank deposits have seen all-time lows. That puts pressure on the bank's ability to kind of lend further, right? I mean, they have to raise those deposits to further lend to customers. So for them, this is one way to kind of borrow from the market. Other reason is also from securitization for NBFCs and banks gives a lot of capital relief. Capital relief essentially means that financial services business, RBI stipulates a minimum requirement of capital to run these businesses. And as you grow and you borrow more and leverage, your capital gets blocked. And securitization is a very good way to kind of release that capital in an efficient manner. And securitization as a product is very well defined from SEBI as well as RBI in terms of the guidelines which you have to follow, the regulations, the compliance.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.